Hello, wise investors. Today is Friday, January 28th, the last Friday of this month of January, the year 2022. And we're entering into a new month, so we're going to see some, a series of different types of market movements. Let me go ahead and take this screensaver thing off. Okay. So what I wanted to talk about is anticipating drawdowns. Drawdowns, sometimes when we hear the word drawdowns, sometimes it already has like a negative connotation. As a wise investor, you're going to have to get past that. Just to be blunt and straight to the point. You got to learn to just get over it. Just get used to the market conditions. When I've given this example before, I'll say it again, pretty much goes along the line of the saying, it comes with the territory. Okay, if you're going to go out into the open seas, it comes with the territory. You're going to have some storms. You're going to have some stormy days. You're going to have some stormy nights. That's just part of the whole journey. So if you're embarking on the journey, anticipating nothing but sunshine and smooth sailing, so to speak, then I would probably say you're in Disneyland, because that's just not reality. Okay. All right. Anyhow, the point is this. You should anticipate drawdowns, but I don't ever want you as a wise investor to automatically hear the word drawdown and you just start to cringe or tighten up inside. And it can have a lot of psychological negative connotations, especially if you've had bad experiences in the past. So I want to go through these accounts and kind of illustrate this so that you'll be able to understand, because look, just like the law of gravity in the physical world, and it goes pretty much what goes up must come down, the same is true here in the financial world. Okay, what goes up must come down. So we obviously, of course, in a fantasy world, we would like to just see up and no kind of down. But come on, let's just be real, right? So let's go ahead and take a look at it. The first one we're going to look at is the purple one here. And let's see. It hasn't fully updated yet. Today is the 28th. Sometimes on Fridays, my FX book, for some reason, probably because, the markets are closing on Fridays. So right now the market is closed. It's 2:48 Pacific Standard Time, 2:48 p.m. Pacific Standard Time. So it's been closed now for about 48 minutes. But anyhow, by maybe Sunday or Monday, everything should be updated. So we'll see. This should probably read 50% because we finally passed the 47 mark. But that's not without, again, remember, reality check. So let's go ahead and take a closer look. We're going to take a closer look at each of these. So the first one here, let's see, current market movement strategy. Let's go ahead and open that portfolio up. And what do we have here? I want us to pay attention to this kind of what I call, a Pac-Man mouth, okay? Or something like a Y-shaped movement where let me zoom in here so you guys know exactly what I'm talking about here. It looks like a mouth, okay? Like a snake whose mouth is open, all right? So we have here the best case scenario where we are as far as our balance. So 47% growth. But where we are anticipating to go is that 27%. That's the drawdown expectation, possible expectation. It may hit the 27. It may go a little bit above that, and the gap might close a little smaller, or it may go a little bit lower than 27. But overall, so here, if we wanted to paint this scenario, let's just say we wanted to liquidate our account. We want it to just stop completely. If we were to do that, then we would stop at a 27% growth. That means that from the time this account started, which was back in November here, up until now, which is January 28th, okay? If we were to stop at this point here at the 27% growth point, equity growth point, then that means that if we were to liquidate everything would be liquidated according to the equity growth. So then we would be at, if we were to pull out our equity, it would be 27% growth total. And that's great. Absolutely wonderful. So, okay. So, awesome, right? But we're not going to pull it out, okay? Because this is the nature of the market. We're going to see a drawdown phase approaching. After the drawdown phase, it's going to push again further to test higher heights. We've seen the testing of the most highest point previous was 45. Now we're going to see another testing point, which it already reached, which was 47. So we're only going to be going up, guys. We're up. We're moving forward. And we want to see this go up higher and higher and higher throughout the course of this year. Lord willing that I'm still around. Okay? So that's what we're looking at here. That's how it works. Let's take a look at the other account so we can see the pattern is the same overall with this strategy, whether it's the current market movement or current market value. The pattern is still the same. So let's look at another one here. The second one on the list is current market value. Okay. We'll see similar movements here. Okay. So we have, again, that open mouth action taking place, which really indicates that we're going to be seeing a drawdown phase coming. Let's reset that. Okay, zoom in a little bit closer here. All right, same thing here. So I don't need to go over the whole explanation, but I just wanted to go over each account so you can see that the patterns are exactly the same. So we have a 6% growth here. This is, of course, a long-term, more longer-term strategy. If once the drawdown takes place, we're anticipating a 3.75% equity growth as a result. And we're going to keep seeing that push further up, further up, further up until we see our long-term growth reach its goal. Okay, so let's go back here and check out another current market movement, which is a 22% growth on the balance growth, overall growth. So let's go ahead and take a look at this one here as well. And we see, again, same type of pattern taking place, that open mouth. And we have a 22% growth, but the realistic reality is 18%. If we were to liquidate that, then we would have been at an 18% growth on our portfolio from the start of, in this case, this one also November 18th. Right, so, and let's see a couple of more here. Let's see another one here. 12% for current market value. Same thing. This one's a little bit more lower. Okay, it is current market value, so it's going to be a little long term. We'll see. It still hasn't really left the zero line yet, so we see a possible drawdown of below the zero at -4, okay, so that it can test a low point. Everything has to test a high point, and everything has to test a low point. That's the nature of all assets in the market. They're only testing previous price points. That's all. Okay, that's just the nature. Up, down, up, down, up, down. All right. Let's go and look at one more here, the newcomer here, which is an actual account for somebody we're doing account management for. And let's see here, same thing. We're seeing this one, nice little jump. They came in at a very good point in time, and so they got a nice little boost, but hopefully they have understanding. Hopefully they have the understanding of a wise investor, and they know that drawdown should be anticipated. Okay, so we should always anticipate the realities of the market. Don't fool yourself. Same should be true. Same is true in life. Okay, don't fool yourself. Okay, life has its ups and downs, and up again and down again. All right. So here we go. We got the 9.73% growth and anticipated drawdown a little bit above the zero line, not quite below, but right at the cusp. Okay. And if they hang in there, continue on, they should see the same results. Now, that's up to them now. This is where you as an investor will be tested. Don't forget about that. I've talked about that before. And for those of you who know, it's not only the assets that are gonna be tested. You yourself as an investor will be tested. Okay, usually around this point. All right, but you're gonna go through a whole lot in your head, and it's up to you. Are you gonna hold on and hang in there through the long run? Okay, or will you give in to the pressure? Will you give in to the old habits and the old thought patterns and go right back onto the cycle? And it's really disheartening to see, certain people that I've seen. I'm going to close out with this final point. Certain people I've seen that have come on board. They've come along, even in the Forex helper days. Okay, they've come on board and they were trucking along just strongly, going along just fine, and they were going through all the hurdles. They went through, some of them upwards to 3 storms, and some serious storms too. And they stuck through, and they've, but it was maybe the 4th or the 5th storm, and they just could not quite get it. They couldn't get past the realities of the market because, again, there's still that residue of that old way of thinking. Once you eliminate that old way of thinking, that only comes through experience, though. It comes through experience over and over again, utilizing this method, sticking through it, and then they go back and then they try their old ways, and usually, guys, it ends up with a blown account. I'll just be honest with you. It ends up with them losing it all. I mean, some of them do very well for a little bit of time. But they haven't given enough time to really, truly back test what they're doing. And they may even be riding on the swell of the market and not even realizing it. Don't know which direction it's really going. Then they begin to panic. That's the next thing that comes in, panic. When you're doing this, there's no panic. You've gotten it to the T when you can see everything in red and you don't even panic. You're not even tripping. You're like, okay, that's normal. It just becomes so normal. But to the average investor out there, online investor, they'll see that red and they'll freak out. They'll panic and they'll start buying and selling. And then it just, now when your mind is in that panic mode, you've shut off all logical thinking. Your brain is operating in a completely different mode. Illogical. There's no reasoning at all. Now everything is just based on impulse, instinct, and emotion. And that's it. And that right there, my friend, is a recipe for a sinking ship. Guys, I'll see you. Have a wonderful weekend. I'll see you at the end of this weekend, beginning of next week, Lord willing. And remember, only winners invest in their minds for wiser returns.